Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with our euro currency analysis. So despite that just one session has passed, we already have few important moments that we need to discuss today. And first of all, starting from the daily chart, as usually you could see that yesterday, despite that the range of this session was relatively small, you could see that market has formed bearish reversal session yesterday. So creating the new top compares to the Friday session and close below the lows, which call reversal. In a way, when the reversal session is forming somewhere in the middle of some motion and some swing, it usually treats as a acceleration session. So it means that here we could get some downward continuation. If you remember, on weekend we were talking about some tricky moments, and one of them was the bearish grabber on the dollar index on the daily chart. And we said that we agreed to, first of all, keep an eye on what will happen with this grabber, and second, our trading plan suggests 2 points. First of all, for the most conservative traders, we said you probably need to wait when the Fed meeting will be over and then take a look what is happening and then decide on the position taken. Those of you who would like or ready to take some more risk, you could consider pull back on the lower time frame on the hourly chart that we will discuss a bit later, with the ability to take the position maybe just with the decreased trading size, trading volume. So these two options we were considering. Now, second moment that we need to talk about is grabber. You could see that grabber has been erased, and in general, as we said, the appearing of this grabber was not quite rational from the overall point of view, overall statistics, fundamental background patterns that we have on the weekly chart. Now on the weekly chart, we have just strong bullish grabber on the dollar index that suggests action above 105 area. So market has to climb above this area. It's really significant action. In fact, it means that the hand and shoulders that we have as on the dollar index right there, you could see hand and shoulders will start to work, and potentially grabber, target of the grabber, this is just the minimal destination point. Potentially we also could consider the classical target of the hand shoulders, such as the ABCD pattern here. It means that something should happen that should trigger some support for United States dollar. It should start rising. Maybe a statement of the Fed today, tomorrow. Because as we said, and as former finance minister Sanders told on Bloomberg TV, that actually I wouldn't be surprised if I see that the Fed even will increase the rate. And a lot of other moments exist why they could do this, as a political, as economical, all of these moments we have discussed in our weekly reports. So that's what we have here on the daily chart. On the lower time frame, we see that market now is challenging the confidence, and actually you can see it's mostly breaking it down already. It also means that action with this hand and shoulders that we've got previously and right to the OP is over. This pattern is not valid anymore, because after completion the target market is dropping below the neckline. It means that we're not considering any upward extension of this pattern. So we're not speaking about the XOP. And on the way down, we have two support areas. 50% support stands approximately around 108.40, somewhere in this area. Next will be 108 and 618 support. Now, by taking a look at the short-term chart on the hourly chart, you could see what's going on. That was our retracement that we discussed. If you remember, in the weekend we said keep an eye on the first around 108 area, where the OP stands. You could consider taking the short position if you'd like to take more risk and you're ready to pass through the statement of the Fed. It's possible. And next level that we also were speaking about is 109.35. It's right there where the XOP were standing with this ABCD pattern as well. So you can see On Monday, OP has been completed, market collapsed. So if you haven't taken the short position in the current moment, market stands in some halfway to the target. So you can see that we have this big ABCD pattern to the downside. Market is falling to, first this was the OP, ABCD retracement after OP, which is really great performance, classically perfect from the technical point of view. That just gives us more confidence. Market is keeping the tendency valid and just keep going lower. Next target will be XOP. It's 108.35. It agrees with 50% support, and probably market will reach it right at the point where the Fed meeting will start. So that's why if you would like to, of course, you could try to jump on a halfway in this action and get this action to the target as a potential profit. But from this standpoint, you will have to place stop at least above this area. This is not perfect point for stop placement, but this is just at least area. And here probably risk-reward ratio will be 1-to-1. So you need to make the decision by yourself. Normally, following the classical technical analysis, you should wait. If you already has missed this action, it's better to wait when the market will hit the next support, and then will show, if it will show, moderate bounce from the 50% level that we have here, and market also create an agreement with this XOP. So it will be, well, at least theoretically, it is not bad chances that we could get the bounce here. It's also trend line stands in this area, and then consider taking of the short position, because we're dealing right now with a big pattern, which is a weekly pattern, and it is still a long way to go. That's why if you missed just the 20 pips, I don't think that this will be really the problem. So concerning the Fed, currently it's widely expected that Fed will not change the rate, and the only intrigue stands around the comments, whether Fed will be ready to do more hawkish comments right now, or they will do this a bit later in the later sessions. So today maybe they will try to keep everything as it stands, but after getting some more data close to the summer, when the widely anticipated rate cut will come, the time for it will come, they probably could change the rhetoric. So this is also possible. So this is the only uncertainty that we have currently, and depend on them actually it means where we'll get the bounce here or not. So that's our view currently on euro currency. So we have strong bearish pattern on euro currency, suggesting significantly deeper downward action in the perspective of the few weeks. We're not considering taking long position by far. Those who were able to take the short here, you could keep them. Just think about what to do when the market hits this area, whether to take part in the Fed meeting or not take part. So maybe book a result and then see what will happen. So those who just would like to take the long position, our preferable approach is to wait when the target will be reached and then hope that the pullback will happen. Because jumping in right there, it carries a lot of uncertainty and not very attractive from the risk-reward point of view. So that's all for today. Let's see what will happen.